Good morning, everyone. I am David Talbot, Managing Director and Head of Research here at Red Cloud Securities. Our next presenter is Philip Williams, President and CEO of Consolidated Uranium. Now, Consolidated has assembled an extensive suite of development projects globally, but it's focused on moving 3 mines towards production in the USA. So, Phil, you've got 15 minutes, and then we'll have a 5-minute Q&A session at the end. Everybody, hit the buttons, ask your questions at any time. We'll get to as many as we can. Thank you.
Thanks, David, and thanks again to Red Cloud for hosting the conference and including Consolidated Uranium. As David mentioned, we're a global uranium developer with near-term production potential in the US. We're a relatively new company. We've been around for 2 years, and everything that you see today, we've done in the last 2 years. So let's move right into it. So this is the motherhood statement as we talk about Consolidated Uranium. We think we have the right strategy. And today, more than ever, we can say that that uranium is the right place to be. We've clearly emerged from a 10-year bear market, and David and other people presenting today will do a much better job than I will explaining how exciting the space is, but it really has come off the mat and has tremendous runway from here. Consolidation, our strategy, was a proven strategy in the past bull market, and I'll walk you through that in a second, but it has the potential to generate significant returns. And again, we think there's a lot of runway from here. We're now, in the last 2 years, we've accumulated the portfolio of projects. We're now focused on project advancement, but we're going to continue to grow through acquisitions. We have the right team. Originally, the company was founded by the team behind NextGen Energy and Mega Uranium, names that many of you will be familiar with. Some of those people are still involved in an advisory capacity, but over the last 2 years, we've added additional members to the management and the board with significant experience in uranium, but also in project development, M&A, and finance. And we have the right assets, and that's what I'm really going to talk about today. We have a diversified portfolio of projects across geography, stage of development, and deposit type. We also have projects in some of the top uranium jurisdictions and mining jurisdictions around the world. We think that's very important, particularly in the current geopolitical climate. And the focus really, as Dave pointed out, and we'll reiterate time and time again through this presentation, is that we're focused on advancing our US projects, which are positioned for rapid restart. And we're well funded with over $30 million in working capital. Just take a second here to talk about the share performance and the share table. We've had a very nice run over the past 2 years since we've deployed this strategy. And a lot of that has to do, of course, with the uranium market resurgence, but also I think we've done a pretty good job of adding projects to the portfolio, buying them well, and now moving them ahead and adding value for shareholders. The thing I would highlight here is we have a significant shareholder in Energy Fuels. Those US projects we acquired from Energy Fuels, they're a 19% shareholder. And another theme of this presentation will be that the deal with Energy Fuels is more than just a sale transaction and purchase transaction. Energy Fuels is truly our partner here. As a 19.9% shareholder, they're very much committed to supporting our company moving forward. On that note, and I will only spend a second talking about the team, but I would highlight Mark Chalmers, the CEO of Energy Fuels, has come on the board of directors. He's the most recent addition. He's a mining engineer with 40 years of experience in developing uranium projects around the world. Again, that speaks to that's a testament to the focus that Energy Fuels is going to place on our partnership. And really strengthens our board of directors. The other person I would highlight on the team would be Marty Tunney. He joined as president and COO late last year. Again, as we pivot from the acquisition mode to the project development mode, we wanted to add more technical expertise to our team. Marty's a mining engineer. He's helped permit and build mines in North America, and he's really going to be focused on advancing the project portfolio as it is. Not going to spend any time talking about uranium. Of course, I think we're all very excited about it and where it can go from here. I would highlight that in our portfolio, we do have significant exposure to vanadium. Vanadium has had a nice move recently. It's now over $11 a pound. Its main demand driver is from steel, but the future of vanadium, we think, is really in grid storage batteries. And it's a thematic that we're quite excited about and really does dovetail with nuclear power and all of the things that have to come together to support low carbon power. Talk about the consolidation strategy. Our business plan is really modeled on the consolidation strategies of other uranium companies in the previous bull market. Here we just illustrated by showing the performance of Mega Uranium, which was one of the original consolidators. This is their share price chart from the beginning of 2005 to the end of 2006. They did a number of acquisitions and were very successful. Their market cap increased from 15 to 940 million over this period. This was our model. And now 2 years later, we can show our performance. We have a similar trajectory in terms of number of acquisitions and capital raised. Our share price has also increased dramatically. I think what I would highlight in this chart particularly is that the uranium price in the mega period moved up 3 times from 20 to over 60 on its way to 130. We haven't had that move yet. So I think, again, as I talked about, there's dramatic runway to increase valuations, both for ourselves and other players in the uranium space. The portfolio was particularly constructed using a diversified approach. Uranium is a particularly difficult mineral to develop and build mines around. And so we took this diversified approach, and we're in 4 different countries around the world. All of our projects have historic resources and significant previous expenditures. And I think we did a very good job of buying these projects at sector low valuations. We're going to continue to grow the portfolio through acquisitions. But again, as I highlighted, we're now focused on advancing the current portfolio as well. Here's the portfolio. As I said, we're in 4 jurisdictions. We're in Canada, we're in the US, we're in Australia, we're in Argentina. We have a critical mass of resources at over 100 million pounds of uranium, 110 million pounds of uranium, in fact, and over 225 million pounds of vanadium. I'm not going to spend any time really talking about the projects in the lighter green labels. That was kind of the first phase of building up of the portfolio. The focus really is of the projects in the dark green labels with the white letters, particularly the projects on the left-hand side of the page, which are the projects that we acquired from Energy Fuels, and I'll jump right into those. So here we have the mines. The key mines that we've acquired are the Rim mine, the Tony M mine, and the Dineros mine. They were in production in the past bull market. So again, these are historic mines. This is a prolific uranium mining district. Each of these projects has historic resources in place with exploration potential. Importantly, when they were shut down at those times referenced in the boxes there, they were kept, all the permits were kept in good standing by Energy Fuels. So this positions them, as I said, for rapid restart as market conditions to continue to improve. The other important factor to all of these mines that's important to notice is that they're all in trucking distance to the Energy Fuels White Mesa mill. The White Mesa mill is the only operated, permitted conventional uranium mill in the US. And so if you have conventional projects, which these are, and you want to move them ahead, you need access to a mill. And we are the only company other than Energy Fuels that currently has guaranteed access to that mill. Again, this helps with a very short timeline to production, both as they're permitted, these are fully developed mills, and we have access, fully developed projects, and we have access to the mill. So we announced recently that we're going to undertake some work programs on these projects. This is a busy slide, but it effectively shows you the 3 main mines. It shows you the historic resources and the historic production. At Tony M and Dineros, about 1 million pounds of uranium has been already produced from these mines, and there's still more to be produced. Of course, our year is really focused, the first part of the year is focused on drilling these projects. We're going to confirm the historic resources, particularly on Tony M, and then at Rim and Dineros, we're going to drill to try to find extensions to the known resource areas. And those drill programs will get underway in Q2. We talked about guaranteed access to the mill, and it comes from the toll milling agreement with Energy Fuels. Again, this is a strategic alliance. It's a 3-handed alliance. On top of buying the projects, we've got the toll milling agreement, we've got an operating agreement, and here all this means is that Energy Fuels will continue to operate these projects on our behalf, which was great for a small company. We can benefit from their team, their expertise, and we don't have to staff up immediately to move these projects ahead. We also have an investor rights agreement that governs the investment that Energy Fuels has in the company. Being in the US is critical. We think this is a very strategic place to have uranium projects. The US is the biggest consumer of nuclear power. It has a very small domestic production, and particularly in the current geopolitical climate, we think that utilities are increasingly going to be looking for sources of production in stable Western jurisdictions like the US. And historically, US producers, US near-term producers do trade at a premium. And over time, as we demonstrate that we can move these projects ahead, we think that that's Consolidated is going to get that premium as well. going to talk briefly about our second key project, which is the Matush project in Quebec. This is a very high-grade project at 0.954% in uranium in the indicated category. It ranks as the second highest undeveloped uranium project in the world outside of the Athabasca Basin. And at that grade, it's an order of magnitude higher than the global average. We like it for grade, we like it for its size. We also like it because it's not fully explored. So we think there's tremendous exploration potential. And you can see on the map here on the left, the mineralized zone is in the center, and there's 19 kilometers of untested strike here. This project was the subject of significant work in the previous cycle. Approximately $100 million was spent here. The company that owned this had a market cap in excess of $400 million in the peak market. And again, we bought this project out of bankruptcy for $10 million. So we think there's tremendous upside here. The focus here is engaging with the local community and try to get support for advancing the project. Labrador Uranium, this is a company that we're very excited about. It's actually going to list tomorrow. This is a company that we spun out last year in conjunction with Altius Minerals and Mega Uranium, who've all contributed projects into this company. The company has raised money and will list tomorrow. And this is just one example of the way that we can realize value, that Consolidated will realize value from its portfolio. Of course, we're going to advance assets within the portfolio, but some of maybe the secondary assets, we're going to look at ways to realize through unique, innovative spin-out transactions such as Labrador. And the thing to highlight here for Consolidated shareholders that owned the company at the record date, they got a distributed share of Labrador. So we're giving those shares to our shareholders, and we'll continue to look at ways to give value directly to shareholders like Labrador. Again, this will be trading tomorrow. And so then when we talk about what's the rest of the portfolio, we have them all kind of listed here. Again, these all have historic resources. Significant money was spent on them in the past, and different levels of technical reports were created by the owners. We're going to advance some of these projects this year. We're going to announce work programs on some of them and also look at ways to realize value similar to what we did with Labrador. So catalysts for the company. We've checked some of the ones that we've completed. The work programs are underway in the US, and we'll have a lot more to say on that over the coming weeks and months. We're going to initiate those programs in Australia and Argentina, as I just talked about in the previous slide. Engagement with stakeholders around the Matush project to see if we can get support for that project, and continue to evaluate opportunities. If history is a guide, we've been a very busy company over the last few years. I think we'll continue to be both on the acquisition front and on looking at innovative ways to return value to shareholders. That is the story. It's an attractive portfolio of projects, top-tier jurisdictions, which again is increasingly more important in the current climate, high grade on a global scale, significant past expenditures, and near-term production potential in the very important US jurisdiction. We're very busy evaluating new opportunities, and I think you're going to continue to see us do more on that front. We have a compelling valuation, and we're well funded to execute on our business plan, and a proven track record, both from the history that the people involved bring to the story, but what we've been able to do over the last 2 years in terms of building this portfolio, I think is demonstrative of what we can do going forward. Dave, I think I came in under time.
You did. We've got about 6 minutes of question time now. So very well done. Great, concise presentation, Phil. So we do have some questions here. The first one, we'll start off with corporate strategy. Have you changed your consolidation strategy? Are you now seeking cash flow as you move to develop these mines in the US, or should we really be expecting further M&A here?
Look, I think the strategy has evolved to advancing projects, and why that is when we first started this consolidation path, uranium prices were low. The market wasn't really paying for any project level advancement, in our opinion. So the strategy was buy and hold, and it was a bit of a land bank strategy. That's changed with uranium at $50 as of yesterday, and the market paying attention. We think it's time to move those projects ahead. And quite frankly, the projects that we have, there's some very low-hanging fruit, both on the exploration front, but also on the moving forward to production front, particularly in the US. So it's time to do that, but we're not done on the building of the business. we have a kind of whiteboard of where we think this company should be. There's a lot more M&A to be done in the space. We've seen some already. There's more to come, and I think we're going to be a big part of that.
Right. Okay. Before we get to your projects, are higher uranium prices making further acquisitions more challenging right now?
Yeah, certainly counterparties have different expectations. On the flip side, we have a bigger currency and better access to capital to go and do transactions. And what I can say is there are still many accretive transactions that we can do, and we're going to continue to pursue them. We are going to be judicious, though. We're not in the business of overpaying for assets. We're in the business of buying them right. And part of it is just convincing counterparties that, particularly in transactions where they're taking our shares, they want to be part of this story rather than be a single asset company in a single jurisdiction, which has its inherent challenges. Come be part of a larger organization where we have projects around the globe and get the uplift and the re-rating that we're going to get at Consolidated as we continue to build.
Mm-hmm. And you talk about targeting your acquisitions. Are there any specific jurisdictions you prefer to work in? Any that you'd avoid?
Look, I think that if this latest geopolitical issues that we're seeing globally, but also particularly in the uranium space, if anything, it's highlighted that the jurisdictions that we are in today are the right jurisdictions. So we're going to want to continue to build our portfolio in those jurisdictions. I think what we've done, and even if as I look at it right now, by anchoring our resources in top tier jurisdictions like Canada, the US, and Australia, it does give us the ability to take on a slightly more risky jurisdiction. We think Argentina clearly fits into that bucket, although we're very excited about Argentina because it does have a domestic nuclear industry. It is growing its reactor base, and it does want domestic production. So we'll take some calculated risks on geographies. We're not going into every country. I think we'll focus on the main ones that we're in and maybe add around the margin a project here, a project there, depending on what those individual project characteristics look like and how it might fit in with the rest of the portfolio.
Okay, great. Thank you. Maybe could you discuss the Labrador uranium spin out a little bit? Great idea, but why didn't Consolidated keep any interest internally rather than spinning all of it out to your shareholders?
It's just not our business model to own shares in other companies. Other people do that. What we really wanted to do, first of all, why did we do it? Because it made eminent sense to take our project, which has a resource, which was a relatively small package of ground, and mix it together with the Altius ground, which is a huge part of the belt. And pretty much the Labrador now controls most of the belt. And then give it, and then it became more of an exploration resource growth story, different from advancing to production like we're doing in the US. So I think it made sense to do that, give it its own management team, fund it separately. But we don't want to own shares in other uranium companies. We wanted to give those shares to our shareholders. We want to reward them because share equities that we own would trade at a discount. So we just want to give them to our shareholders, and we want to keep people excited about owning our shares so maybe they can get the next one.
Right. Okay. You talked about the shift to development. Maybe could you discuss the importance of the agreements with and the investment by Energy Fuels, largest uranium producer in the US?
I can't overstate the importance of that agreement. It puts us in a unique playing field relative to our peers. We're the only company that has that guaranteed access to the mill. And just by the nature of those projects, we're fully developed. Tens of millions of CapEx was spent on them. They're very low cost for us to bring back into production. And because of the nature of the permitting, again, that Energy Fuels kept in good standing, we can also move those projects back into production very, very quickly. So as uranium prices spike, I think we're going to be one of the first cabs off the rank to deliver production into the higher price environment.
Okay. And now you touched on this, but to get those mines into production, what are the key steps required? Resource development, mine refurbishment, permitting.
All of those things, Dave, and those are all the things that we're undertaking this year. So the drill programs I talked about, we're doing some permitting on the ground, which isn't sort of new as newsworthy, but very important to move those projects ahead. We're putting new ventilation into the Daneros mine right now. We're applying for a large mine permitting. We're doing all of that on the ground work so that we're ready to go as soon as the prices achieve what we need.
Perfect. Okay, well, why don't we wrap it up there? We're out of time. So thank you very much, Phil. Thank you, everybody, for joining us today.